In an unusual way on the market, as we can see, the price of Pi continues to drop significantly. But I have information that could restore hope for pioneers who hold Pi coin. What if I told you that Pi network could hit $100 while most people are completely ignoring the massive signals happening right now? The Pi network price just dropped over 2% to 61 cents. But smart money sees this as the perfect entry point before the explosion. While everyone else is panicking about market weakness and geopolitical tensions, I'm about to show you why this dip might be your last chance to get Pi under $1 before it rockets to triple digits. This information is very important, but before anything else, let me greet you and welcome you to the channel that brings you reliable updates. If you're here today, you're truly lucky, because hope is about to return after learning how Pi is about to regain its value and surpass other regular crypto coins in the market space. Whether you're tuning in from bustling cities in the United States, growing tech hubs in Nigeria, innovation centers in India, entrepreneurial communities in the Philippines, emerging markets in Brazil, financial districts in the United Kingdom, or anywhere else across our connected world, you are part of something absolutely extraordinary that's about to reshape the entire cryptocurrency landscape. If you believe Pi Network is heading to the moon and you're ready for this incredible journey that could change your financial future forever, you can join our community by smashing subscribe button and ring notification bell if you haven't already. Also comment PI Network to the moon along with your country name for seeing our global Pi family grow stronger every single day. Let's now get started. Right now, Pi Network is trading at around 61 cents, down over 2% recently, and I know what you're thinking. How can something at 61 cents possibly reach $100? But here's what the mainstream media won't tell you, and what most investors are completely missing about this incredible opportunity. Pi just hit a low of 55 cents and bounced back to a recent high of 63 cents, showing incredible resilience in this bearish market. This price action is creating a perfect setup that reminds me of Bitcoin's early days when it was trading for pennies, and I'm about to break down exactly why this current dip might be the opportunity of a lifetime that separates the smart money from the crowd. The recent price drop is partly linked to broader market weakness, especially with rising geopolitical tensions across the world, creating uncertainty in all financial markets. But here's the thing that's absolutely fascinating and what most people are completely overlooking. While the price dropped and panic sellers rushed to the exits, something incredible happened behind the scenes that reveals the true strength of Pi Network. Despite heavy withdrawals from the OKX exchange recently, which you'd expect to reduce supply, the total Pi supply on exchanges actually rose by a massive 29 million in just the past week, now sitting at 346.4 million Pi. This tells us that more sophisticated investors are moving their Pi to exchanges, positioning themselves for what's coming next, and this is exactly the kind of smart money movement we saw before Bitcoin's major breakouts. Looking at the technical analysis, and this is where it gets really exciting for those who understand chart patterns, the price seems to be forming a possible double top pattern near a key resistance zone. This is raising the critical question that every Pi holder needs to answer. Will Pi break out of this pattern and explode higher, or will we face another rejection that tests our patience? But here's what's giving me massive confidence and why I'm not selling a single Pi coin. The MACD indicator has shown a slight bullish crossover while trading volume remains steady, creating the perfect technical setup. This combination of technical signals is exactly what we saw before major breakouts in other cryptocurrencies that went on to gain hundreds or even thousands of %. Now, Pi coin is still far from its all-time high of around $3, which might seem discouraging to some people, but here's what most people don't understand about market cycles and crypto development. The project's network continues to grow exponentially every single day, with developers actively working on game-changing updates that will revolutionize how we think about digital currency. The current price action is simply creating a massive accumulation phase, similar to what Bitcoin experienced between 2015 and 2017, before it exploded from hundreds of dollars to nearly $20,000. Many traders are wondering if Pi could climb towards the $1 mark soon, but I'm here to tell you that's thinking way too small and missing the bigger picture entirely. The real question that's keeping me up at night and should be keeping you excited is whether Pi can reach $50 or even $100. And after diving deep into the fundamental analysis, market dynamics, and adoption metrics, I believe the answer is absolutely yes. The path to $100 isn't just possible, it's becoming increasingly probable with each passing day. Let me tell you about the 3 major factors that top analysts believe will decide Pi's future, and these are the exact same factors that turn Bitcoin from worthless digital tokens into the most valuable cryptocurrency in the world. Understanding these factors is crucial because they represent the difference between life-changing wealth and missing out on the opportunity of the century. The first game changer is major exchange listings, and this is where Pi Network is positioned for explosive growth. If big platforms like Binance or Coinbase announce Pi listing, it could spark a massive price rally that makes early investors incredibly wealthy overnight. We've seen this pattern repeatedly throughout crypto history. Small coins with strong fundamentals get listed on major exchanges and suddenly explode 10x, 50x, or even 100x in a matter of days or weeks. The trading volume and exposure that comes with major exchange listings creates buying pressure that can send prices into the stratosphere, and Pi Network has all the fundamentals that major exchanges look for. The second factor is ecosystem growth, and this is where Pi is absolutely crushing every other cryptocurrency project in the space. As more apps and services start accepting Pi for real-world transactions, demand for the coin will naturally increase through genuine utility rather than just speculation. We're not just talking about people buying Pi hoping someone else will pay more later. We're talking about real-world utility that creates genuine, sustainable demand. When people can use Pi to buy coffee, pay for services, book travel, shop online, and conduct their daily transactions, that's when the magic happens, and prices can sustain massive valuations. The third factor is regulatory approvals, and this is absolutely crucial for institutional adoption. Clear rules from governments will determine whether Pi becomes a mainstream financial tool or remains a niche cryptocurrency. If regulations are favorable and provide clarity, institutional money will flood in like we've never seen before. If they turn strict and create barriers, it could slow down Pi's growth temporarily. But based on what I'm seeing globally, with countries like El Salvador adopting Bitcoin and the European Union creating crypto-friendly frameworks, the regulatory environment is becoming more supportive every single day. Let me give you my detailed price predictions based on careful analysis, realistic scenarios, and comparison with other successful cryptocurrency projects. These aren't just random numbers, they're based on market cap analysis, adoption curves, and historical precedent from similar projects. In the short term, over the next few weeks to months, if momentum picks up and we break through current resistance levels around 63 cents, Pi could easily revisit its previous highs of $1.50 to $3. That's already a 3x to 5x return from current prices, which would be incredible gains in traditional markets, but that's just the beginning of what's possible with Pi Network. The technical setup suggests we could see this move happen faster than most people expect. Medium term, by 2025, with strong adoption metrics and major exchange listings creating massive exposure, Pi could realistically reach $10 to $50 per coin. This isn't wishful thinking or unrealistic expectations. This is based on careful analysis of market cap potential and adoption curves. When I look at other cryptocurrencies that have achieved similar user bases and ecosystem development, these price targets become very achievable and even conservative. Long-term, by 2030 and beyond, if Pi successfully builds a solid crypto economy with mass global adoption, optimistic forecasts suggest prices between $50 to $100 are not just possible but highly probable. The combination of limited circulating supply, massive user base, and real-world utility could create the perfect conditions for sustained high valuations. However, and I need to be completely honest here, because I respect my audience too much to sugarcoat anything. If adoption slows significantly, or early miners start selling off their massive holdings all at once, prices might remain under $10. This is why understanding market dynamics and timing is absolutely critical for maximizing returns. Here's what's absolutely incredible about Pi Network and why it's different from every other cryptocurrency project out there. It already has over 50 million registered users, which is mind-blowing when you really think about it. The genius of Pi Network lies not just in its accessibility, but in its understanding that the future of commerce belongs to peer networks and decentralized platforms that prioritize trust, efficiency, and inclusivity over centralized control. While Bank of America and other legacy institutions are just beginning to recognize the limitations of their centralized systems, Pi Network has been building infrastructure that operates on fundamentally different principles. We've created a network where financial power is distributed rather than concentrated, where transactions happen peer-to-peer without traditional intermediaries taking their cut, and where every participant has a genuine stake in the system's success, rather than being merely a customer to be exploited. What makes this moment historically significant is that it validates the work of countless developers, entrepreneurs, and everyday users who embraced cryptocurrency not as speculative gambling assets, but as functional tools for real commerce, genuine savings, and practical investment strategies. Projects like Pi Network and other mobile-mined assets have demonstrated how decentralized finance can be both inclusive and practical, building the infrastructure of a completely new economic system in real time, while traditional banks were still holding committee meetings about whether blockchain technology was even legitimate or just a passing fad. The integration of Pi Network principles into Bank of America's stablecoin strategy represents more than just technological adoption. It signals a fundamental shift in how traditional finance views decentralized technology and acknowledges that the old ways of doing business are becoming obsolete. For years, centralized banking has relied on control and intermediaries as means of security and regulation, creating systems where they hold all the power and customers have no real say in how their money is managed or moved. However, this model increasingly conflicts with the values of a digital world where transparency, speed, and peer-to-peer connectivity are paramount and where people expect to have control over their own financial destinies. Centralized systems create single points of failure that can bring down entire networks, exclude large segments of the global population who don't meet arbitrary requirements, and struggle to adapt to rapid technological change because they're weighed down by bureaucracy and legacy infrastructure. When one server goes down, millions of people can't access their money. When one executive makes a bad decision, entire economies can suffer. When one government changes policy, countless individuals lose their savings overnight. In stark contrast, decentralized finance offers resilience that comes from distribution across thousands or millions of nodes, inclusivity that welcomes anyone with a smartphone regardless of their background or location, and adaptability that allows rapid innovation because there's no central authority slowing down progress. By exploring stablecoins with blockchain foundations similar to Pi Network's mobile-first approach, Bank of America implicitly acknowledges that their current model is insufficient for modern consumer needs and that the future belongs to systems that empower individuals rather than institutions. The question remains whether a centralized institution can truly embrace the decentralized ethos that makes blockchain technology transformative, or whether their efforts represent too little, too late. The reality that Pi Network pioneers understand is that the future of money is already operational. It exists in the millions of phones mining Pi coins, in the decentralized applications being developed on blockchain platforms, and in the communities reimagining commerce in ways that were once considered impossible. Bank of America's move into stablecoins isn't the beginning of a new trend. It's a belated acknowledgement of a reality that has been emerging for years through the dedication of crypto communities worldwide. What this means for Pi network holders extends far beyond simple price speculation. This validation from a major financial institution provides instant legitimacy to a project that many dismissed as experimental. When traditional banks acknowledge the viability of mobile-mined cryptocurrencies and decentralized finance principles, it removes institutional doubt and opens doors to mainstream adoption that seemed impossible just years ago. The practical implications are even more significant. Instead of Pi network existing in isolation from traditional finance, we're moving toward integration where Pi coins could facilitate banking services, everyday payments, and international transfers through established financial networks. This bridges the gap between the decentralized future we've been building and the centralized systems that still dominate global commerce. Let me put that number in perspective for you. That's a built-in community larger than most countries, and this community could drive massive demand once the coin becomes fully tradable on all major exchanges. If even just 10% of these users actively trade and use Pi for transactions, it could push the price sky high. Similar to what we saw with early Bitcoin adoption, when a small group of dedicated users created enough demand to drive prices from cents to dollars. But here's where the story gets really interesting. And this is something most YouTube creators won't talk about because they don't want to present both sides. Unlike Bitcoin's carefully limited 21 million coin supply that creates natural scarcity, Pi has a staggering 100 billion total supply. While most of this Pi is locked up right now in the closed mainnet system, the big question that keeps critics up at night is what happens when it gets unlocked and becomes tradable. Some worry that a flood of coins could enter the market suddenly, leading to a massive sell-off and price collapse that wipes out early investors. Pi has been in closed mainnet mode for what feels like ages, with no completely clear timeline for full trading access across all platforms. Some critics suspect that these delays are intentional, designed to keep users engaged and mining while avoiding an early price crash that could destroy confidence. But here's my take after studying successful cryptocurrency launches. This controlled release might actually be genius strategy. It's preventing the massive dumps and volatility we've seen with other cryptocurrencies that released everything at once and crashed immediately after launch. The truth is, Pi network represents two completely different scenarios, and understanding both is crucial for making smart investment decisions. Pi believers, and I count myself among them, see a once-in-a-lifetime opportunity to get in early on what could become the world's most adopted cryptocurrency. The massive user base that's already engaged, the real-world utility being built every day, and the controlled supply release could create perfect conditions for explosive, sustained growth that makes early adopters incredibly wealthy. On the other hand, skeptics raise valid concerns that every smart investor needs to consider seriously. They point to the long development timeline, the massive token supply that could flood the market, and they question whether the ecosystem will ever deliver on its ambitious promises. They worry that Pi might be all hype with no substance, leading to disappointment and financial losses for believers. But here's what I believe after analyzing all available data, studying similar projects, and watching the Pi ecosystem develop. If Pi network successfully launches with genuine real-world utility and maintains intelligent controlled supply release, $100 per coin is absolutely within reach. The combination of 50 million engaged users, growing ecosystem partnerships, and limited circulating supply could create the perfect storm for massive price appreciation that rewards early believers. However, if it turns out to be all marketing hype with no real substance behind the promises, a devastating crash could be inevitable and early investors could lose everything. This is exactly why doing your own research, understanding all the risks, and never investing more than you can afford to lose is absolutely essential. But also, don't let fear of potential losses keep you from potentially life-changing opportunities that could set you up financially for life. So what do I think after this deep analysis? Is PiCoin the next big thing that creates millionaires, or just another overhyped dream that leaves people disappointed? Based on everything I've analyzed, the massive engaged user base, the growing ecosystem, the technical developments happening behind the scenes, and the favorable market dynamics. I believe Pi Network has legitimate potential to reach $100, but it's going to require perfect execution and favorable market conditions. If this comprehensive deep dive into Pi Network's potential opened your eyes to what might be the investment opportunity of the decade, smash that like button right now and help more people discover this analysis. Subscribe and hit the notification bell because I'll be tracking every single Pi Network development and price movement as it happens. Drop a comment below. Do you think Pi will hit $100? Comment Pi Network to the moon with your country name